Hey everyone, welcome back to your weekly market outlook. This is for the 24th of February 2025, obviously last week of the month of February. How time flies in 2025. All right, let's take a look at last week. A lot of news last week. Obviously, we got comments coming up from Trump. There's also geopolitical changes that's been happening. We've got developments in the Middle East. We also have development with the Russia and Ukraine as well. But that's not really the key point here. I think if we take a look at the key points on what we are looking last week, we're looking at RBA interest rate decision, and this is the first move done by RBA, and obviously this is actually very interesting in terms of what they have commented following the cut. So the RBA basically is cutting this interest rate down by 25 basis points, but it is really more of a hawkish cut, more or less, with the RBA playing catch up with all the central banks around the world that has already started cutting interest rates there. In terms of whether or not they have indicated future cuts happening in 2025, they're not really that sure yet. So it is a little bit more of a hawkish cut at this point in time. Inflation is not really that high in Australia compared to the global countries as well there. So again, this is really more of a hawkish cut coming up from the RBA. Interest rate also reduced from RBNZ. That's 50 basis points. That is a huge cut there, taking down 4.25 to 3.75 from the RBNZ. And obviously, if you're taking a look at what happens next, the FOMC meeting minutes is up next, and if the FOMC meeting minutes, it's not really a surprise at this point in time. So FOMC is basically keeping higher interest rates for longer at this point in time, not really keen into aggressively cutting interest rates due to potential tariff disruptions that could actually push inflation up. And this basically leads to the sentiment, Michigan sentiment there in the US that was on Friday. And we basically have the consumer sentiment in the US drop significantly. That's basically on the back with expectations for higher inflation expectation for inflation to actually be a little bit higher for longer here, and not really expecting the FOMC to actually be doing anything at this point in time. So there's actually less expectation for a cut from FOMC in 2025 at this point in time. I think the market is basically just pricing in for one more interest rate cuts that could continue to disappear if inflation doesn't come down. And obviously this week we're going to be looking at the PCE numbers, and the PCE numbers is basically the key indicator that the FOMC prefers at this point in time. We're expecting income to remain stable. However, we're expecting spending to kind of come down quite significantly from 0.7 potentially to 0.3%. So the PCE numbers here, if we take a look at the core PCE changes per month, we're expecting a little bit of an increase this Friday. That will be from 0.2 to 0.3%. But the year-on-year PCE numbers is expected to go down slightly. So we'll see what happens here, whether or not we're actually going to be looking at significant changes from the PCE numbers this week. Japan market is actually going to be closed on Monday. That's for Emperor's birthday there. Apart from that, we're going to be looking at Aussie inflation number. That's going to be on Wednesday. We're expecting inflation to pick up slightly from 2.5% to 2.6%. Again, this is actually a very low inflation number with RBA not doing anything at this point in time. So is there a necessity for more cuts? Again, as we previously said, the RBA's cut was a little bit more of a hawkish cut. It was more of a catch-up cut rather than one that the Australians really needed at this point in time. Other than that, we actually don't have a lot of key data to be expected this week. We are expecting preliminary GDP numbers. That's going to be on Thursday in the US. That will be on Friday morning in Australia. But we're not really expecting changes here. We're expecting the quarterly GDP numbers to remain stable at 2.3%. All right. Let's take a look at the technicals here. And technical front, we did mention that we were expecting the Aussie to remain inside the Ichimoku cloud. We're expecting resistance to still be in play at 64 cents. And that's basically the case there. We had that drop in the Aussie USD. That's on the back of that lower Michigan consumer sentiment. And also, if we take a look at what's going on here, obviously the expectation for less rate cut from the FOMC has driven the US dollar stronger, and we can see that on Friday. And it's the turnaround in the Aussie USD. Just from a technical perspective, I would call this more or less a perfection here. We got exact turnaround at 64 cents. So for this week, we're expecting immediate support to be at 63 cents, but the range has not changed. We're still anticipating the Aussie USD to be traded inside the Ichimoku cloud at least for the first 3 days this week. So immediate support is going to be at 63 cents. Below that, we're still going to be looking at 62 cents as support. So inside the Ichimoku cloud, that's the expected range for the Aussie USD. However, if price is able to maintain a position above 63 cents beyond Wednesday, it will actually transition above the Ichimoku cloud. So this is something to monitor for this week. At this point in time, it's not a confirmation as of yet whether or not we're going to be looking at trend changes in the Aussie USD. So just keep that in mind. Very similar situation with the Euro USD. Again, we need that 3 days. If price is able to maintain a position above 1.04 for the next 3 days, then it will transition beyond the Ichimoku cloud. It will transition above the Ichimoku cloud. It will actually give us the first confirmation that there is a potential trend change in the Euro USD. But at this point in time, it is still being resisted by 1.05 to 1.0550 range, exactly like how the 64 cents on the Aussie USD is. So we had that turnaround there. We're not expecting a huge range for the Euro USD. We're going to be looking at immediate support at 1.04, and again, if price is able to maintain a position above 1.04, it will transition above the Ichimoku cloud. So this is something to monitor for this week, whether or not we are actually going to be looking at that trend changes in the Aussie USD and the Euro USD. Key resistance remains at 1.05. Any break above 1.05, that will take it above the Ichimoku cloud anyway. So next up for that would actually be at 1.06 on the Euro USD. Not expecting crazy ranges here on the Euro USD. Sterling, on the other hand, we did mention that it has actually transitioned above the Ichimoku cloud last week, but we're not expecting huge movement in the sterling. And you can see what happens here. Price has maintained a position above the Ichimoku cloud. It actually manages to pull back very close to 1.2550. But on the note here that on the first 3 days with the Aussie USD and the Euro USD could actually struggle, with the Aussie and the Euro could actually struggle against the US dollar, that would be in line with the sterling as well. We might actually see a little bit more of a pullback to test 1.25 and 1.2550 range one more time. And if price is able to maintain that position above 1.25, we expect buyers to come in for sterling here. That could lift price up to 1.28. But regardless of the matter, it has transitioned above the Ichimoku cloud. In fact, if we take a look at the floor for this week on the Ichimoku cloud, it's actually not this week, but it's actually up to next week. We are expecting support, a stronger support, to come in at 1.2450. So with that in mind, we might see a little bit of a pullback, but the overall changes here from a technical perspective on the sterling, it is more for a potential of a trend change to an uptrend on the sterling here. So we are looking at that transition period there. Lastly, we have the dollar Japanese yen. For the dollar Japanese yen last week, we mentioned that we were anticipating a deeper push to the downside on the dollar Japanese yen. We're looking at support around 148 to 150 range. Why? Because we're looking at that bullish order block around those levels there. We have reached that level, so it is looking it's looking like the dollar yen is actually quickly approaching key support level here. So definitely something to watch out for here. If price is able to maintain that support around 148 to 150 range, i.e. if price is able to bounce off this bullish order block where price is currently in, then we might actually see a potential correction on the Dow Japanese yen. I'm not talking about a potential trend change here, but I might see a little bit of a pullback to test 152 and potentially even 154 one more time before we see a longer term trend develop to the downside for the Dow Japanese yen. But yeah, if we take a look at where the Ichimoku cloud is, it is really far up top, 154 to 155. That's basically where the major resistance is going to be, and that's basically where the Ichimoku cloud is. We pull back all the way up there. We might not see that pullback, and that's the reason why we're looking at 152 and 154. There could be potential rejections at this either of these two levels there, because the trend has transitioned to the downside. We are looking at a move below the Ichimoku cloud, and this is actually going to be the first time that price has dropped below the Ichimoku cloud on the daily chart since October last year. So it is a major change in the market here for the US dollar. So at this point in time this week, we might see the US dollar strengthen a little bit, but not in the context that the US dollar is really strong. It's really more of a technical correction, and that would apply to all the currency majors that we have discussed today. So the Aussie USD, the Euro USD, the Sterling, they could transition into an uptrend, while the Dow Yen might pull back up a little bit just to test or look for resistance before continuing to move to the downside. And that's basically the technical perspective that we have for all the currency majors this week. Good luck with your trades, and I'll see you soon.